All right. Good morning, Doug. We are here today. I want to talk about investing a little bit because we have a whole generation, I think, of younger investors that watch these videos, that have a lot of them have participated in the bull market, and basically everything over the last decade, and especially cryptocurrencies, and they've been probably a little bit concerned about what's happened with crypto recently, and maybe they're just true believers, or maybe they're worried that it's not going to succeed. I don't really know, but I think that the important thing is that you have a lifelong track record of investing, and the psychological tricks that cost people a lot of money, the mistakes that people make. And so I just wanted to kind of talk about that and share, I guess, starting from sharing a chart that was in Chris Webber's most recent newsletter, which Chris Webber has a fantastic newsletter. I'll link to in the description. I encourage people to sign up for it. It's like $300 a year and totally worth it. But
it's funny. It seems like there's almost an inverse relationship between quality and cost in the newsletter business. Same is true of Mark Faber's letter, and
Paul Rosenberg's, although that's less financial. But yes, I agree.
Yeah. Well, and I think Gerald Celenti's publication, which is voluminous for not much cost either.
Yeah, exactly. But but then you can subscribe to these newsletters that are $15,000 a year, or options trading services that are $5,000 a year.
Options trading services, that's a guaranteed path to financial disaster.
Exactly. Yeah. And I think, and we can talk a little bit about that. So let me show, first of all, this chart. Let me get this up. Let me know when you can see it, Doug. Actually, hold on. It's not there. Let me find it again.
It was full screen the last time when you just brought that up before we got on air.
All right, give me 1 second. All right. Can you see the chart?
Yeah, perfectly.
Okay. So what this is for our viewers, this is a chart of how different asset classes performed over the last decade by year, from essentially 2011 till year to date. And, it shows a remarkable return for Bitcoin. Now, Bitcoin, I think, is almost really shouldn't be considered on this chart, honestly, not because it's not an asset class today, in my opinion, but just because it wasn't an asset class in 2011, 2012, 2013. It was a technology that was still undergoing adoption. But in any case, the remarkable returns of Bitcoin being 20 million% since 2011, which is just, it's a crazy number.
So off the charts, obviously, yeah.
So Doug, what stands out to you when we look at these different asset classes?
Okay. Well, first of all, over this last decade, everything has gone up in price. And people forget that before the creation of the Federal Reserve, prices generally went down every year of everything. Everything got cheaper and cheaper every year. And that was deflation. And deflation is what the central banks today fear and hate more than anything else. And there's a reason for that. It's that in a world that is so full of debt, if the dollar becomes worth a lot more, which is what happens during a deflation, or the currency unit that you're using, then people are going to find it much, much harder to pay the debt, and a lot of debt's going to be defaulted on. So deflation, which occurred when we used gold as money, and actually, it would be incorrect to say that from during the 19th century, actually up until 1913, or actually up until 1933, when gold went out of circulation in people's pockets in the US, it wasn't the gold standard. Gold was used as money, period. So the gold, even though it was fixed in price against the dollar, became more valuable every year, even though it stayed the same price. And that induced people to save. And once again, I like to draw to people's attention that when you save, the only way you can save is by producing whatever it is more than you consume, and you put the difference aside. That's savings. And that becomes capital that can be invested or can be lived off of. And so it was an excellent system. But now, where the dollar is nothing but a floating abstraction, uh, nothing is reliable. And well, they can't have a deflation because this huge pyramid of debt, inverted pyramid of debt that's been built up, will all collapse, and it'll be a financial and economic catastrophe. I don't know if I'm clear in having stated that, but it's absolutely what I just said is absolutely the opposite of what all the quote unquote economists will say today. But they're not economists. They're basically political apologists.
Well, it's like once we switched to this, this fractional reserve banking system where everything became debt based. The only answer is to continue to inflate, right? I mean, the only thing they could continue to do is grow the debt, or else you have this deflationary collapse, and the deflationary collapse is terrifying to all the debt holders. So the solution to the problem seems to be, from the Federal Reserve standpoint, is more debt, right? That's kind of what they've been doing.
Right. If we had a deflationary collapse, which they fear justifiably, you'd have numerous individuals that would go bankrupt with all the consequences of that: loss of house, loss of car, companies that went bankrupt, loss of assets and people's pension plans as a result, unemployed people. So they don't want to see widespread bankruptcies. See, one of the reasons why we've had such a high and increasing standard of living for many years is that we've been borrowing. And it's just like if I borrowed $1 million today, I could live very high off the hog for the next year. Great, it's wonderful. Higher standard of living, isn't that what it's all about? Except when time came to pay it back, if I was going to pay it back, I would suffer a very severe drop in my standard of living, a real drop in my standard of living, after an artificial boost in my standard of living, plus I'd have to pay back the interest. So sure, it looks great when you inflate the currency with debt for just that reason.
So in a way, we basically have we have 100 years of living off of the future at this point, right? I mean, because we've been living off debt for about 100 years. And if there was a deflationary collapse, that snapback would be disastrous. I mean, I can see why the Federal Reserve is seriously afraid of it, like legitimately concerned about trying to avoid that at all costs.
Yeah, and they're hoping that just gentle inflation, which people will kind of find workarounds and learn to live with, will eventually get rid of all that debt slowly and not as painfully as a gigantic collapse. I mean, I can understand their reasoning, except none of this should have happened to start with. And it's basically all their fault, or their fault in conjunction with the US government, because the US government, of course, is by far the world's biggest debtor. And now nobody will buy the debt of the US government, which is, I don't know what it's running now, because Biden's got all these new programs. I don't know what the deficit's going to be this year. $3 trillion is a number I've heard, but
just the budget yesterday was $6 trillion is what they announced for the for the coming fiscal year, is what Biden was proposing.
That's the 6 trillion. Is that the budget, or is that the amount of new debt that they're going to have to float?
That's the budget. I think they're counting on $1.3 trillion deficit for the next year is what they're counting on. But they also expect the budget over the course of the next decade to continue to grow and be over $8 trillion a year, but by 2030. So yeah, it's a lot.
It's funny. There was a U.S. senator from Illinois many years ago named Everett Dirksen. And what he's most famous for, I think, is his little quip a billion here, a billion there. Pretty soon it adds up to real money. And that was a funny joke in those days. But now a billion is just a rounding error on all this stuff.
It really is. It really is actually. In fact, I know this is a separate topic, and we'll come back to this chart here in just a second. But it's worth saying that there was a proposal to help the homeless situation in the United States that I saw yesterday, and they wanted to fund it with $20 billion, and and they talked about how that wasn't nearly enough to solve the homeless crisis. And when I looked and I read the article, now beyond the headline, and then you see that the HUD last year estimated that there were 528,000 homeless people on any given night. So if you just assume that's a static number, that's about $35,000 per homeless person. 20 billion is. I mean, you would think that would be able to resolve the problem somehow, but it's not even close. And then that's just the federal budget, not even the state resources that are already dedicated to it and city resources. But it's not enough. 20 billion is a rounding error.
Yeah, it's very funny. So, okay, if you divide the numbers out, if they get their 20 billion, which isn't much money in the context of trillions of deficits, that works out to $35,000 per.
A little under 35,000. Yep.
Gee, that's about what the average person makes in a year at a reasonable wage, and I presume that would be tax-free to them. And should we further pollute and degrade the language by calling them homeless people, or should we call them what they used to be called, bums?
Yeah, Doug, they want to call them campers or houseless people. I think they're trying to, because they might not have a home, or they might not have a house, but they still have a home.
They still have a home, right?
And it's worth it.
Well, further proof of the general degradation of civilization. Well, we can't even use words accurately. Forget about spending money intelligently.
Exactly.
Wow.
Exactly. Seems like money's not the problem.
I wonder, you'd think that somebody would have drawn that to the attention of these people. Hey, why don't we just write a check for $35,000 to each of these people?
Right. Exactly. Why not? It just seems like it's a better option. Well, but the truth is,
it's free money, huh?
Yeah, but they don't like to give money directly to people. They give them a little bit to keep them in line, I think is the objective. But even just the fact that Biden's new budget of $6 trillion is a huge increase, and it's just, of course, it's an ungodly amount of money, and a lot of that money is going to different agencies and to the military and foreign adversaries, really, and or foreign messing around with things. And remember there was a big fight when he was elected about whether or not he was going to send out a $1,400 check or a $2,000 check. So it was a really big deal whether or not you give individuals another, that extra $600 as stimulus money. But and I think that would have equated to something like another couple $100 billion. It was a big fight over that. They don't want to give that directly to people. Instead, they want the grifters to be able to siphon off as much as possible. And the homeless grift is a big grift. It really is. There's, so many billions of dollars lost there every year, and no one gets help. It just gets worse.
Yeah. The king is trying to decide when he has a parade, he's going to toss things to the motley crowd surrounding his carriage. Should I toss popcorn to them, or should I move it up to candy corn? God forbid I'm going to toss them little pieces of chocolate. That's too expensive.
It's ridiculous. Don't be ridiculous.
It actually all is ridiculous, and nobody questions these things. When you listen to the media, they never mention a mathematical fact that you just brought up.
Yep, I read thoroughly in that article, and I'm like, okay, 20 billion is not enough. I'm like, show me the justification, and they went through a bunch of different things, but they never did the simple math.
No,
how much per individual, so that someone can understand it easily.
Well, it's not going to get better until the whole system is ripped out by its roots. And I hate to say that, because this is one of the problems with Antifa and BLM and socialists and communists and progressives, is they actually want to rip out the whole system in the US by its roots. And in a way, I mean, I'm completely unsympathetic to their underlying premises and their underlying morality and intentions, but I can understand how the current system is so corrupt. They do want to rip it out by its roots. I do too, but I want to replace it with what, you know, with what came before,
Yes.
which was not coercion based, which didn't center around the government, the state.
Right. And, you know, you think I think the BLM and the Antifa people, they really don't understand what has made the system feel unfair and feel wrong. And, you know, really it's the currency. It all comes back to this, to the fact that if there's no honest money, then everything becomes dishonest and it just compounds on top of each other. And, you know, the way to win, the way to succeed is a grift oftentimes. And, you know, I just think they just don't understand that. And so they'll do the exact wrong thing to solve the problem instead of actually addressing it. And I mean, the MMT, for instance, is their answer to the problem. More money printing, more money distribution, you know, is the answer, which is like, you know, I wouldn't say that's the opposite of the answer though, Doug, because if you're saying that there'll be an inflationary collapse, if they don't continue the debt, if they don't continue this stuff.
They painted themselves into a corner at this point. Uh, I don't see how they can get out of it at this point, because if they stop creating money, it's going to bring on a real collapse because there's so many people relying on the government. But on the other hand, if they keep doing what they're doing, the dollar is going to lose all value and all activity will be under the wing of the state. So what do you choose? You choose Scylla or Charybdis, actually. Uh, actually, it turned out that in the Odyssey, Ulysses actually, or Odysseus, actually did choose Scylla, because when he went by that monster, it would only take 6 of his men, where if he chose Charybdis, he'd go down the whirlpool and they'd all die. So yeah, you do have to make a choice between Scylla and Charybdis.
And the inflation one, some might survive. You know, the inflationary approach versus the deflationary approach, everything collapses.
Well, the trouble, for a while anyway, until the currency loses all value. Because if the US currency loses all value, that's much, much more serious than the Zimbabwe currency or the Venezuela currency losing all value, because those were minor countries with currencies that were only important within the country, but the rest of the world was in a position to help them out, to invest in them, to give them aid, whatever, to keep those people from starving. But if the US goes down, the whole world is relying on dollars. I mean, even the people in Venezuela and Zimbabwe own dollars, if they own anything. So when the dollar's wiped out, everybody's wiped out. All the central banks own dollars. In 50 countries around the world, including Argentina and Uruguay, major transactions don't happen with pesos, they happen with the US dollars. So if they destroy the dollars, this is a genuine worldwide catastrophe.
But if you imagine in the metaphor you used with Odysseus, if on one side, you know, you're going to lose everybody through this deflationary collapse, and the inflationary approach, which ultimately also leads to collapse along the way, some of the elites can be enriched and have ways to survive. Like, you know, the huge amounts of money that's been earned recently, for instance, you see like the example of, you know, Bill Gates and buying up huge swaths of American farmland, for instance, buying actual hard assets that regardless of what happens, you know, they still have production. They still have some utility anyway, you know, rather than derivatives of some kind. So maybe that's the approach. You know, some of them will be able to be saved if under the inflationary approach.
Well, the question is politically, what's going to happen to guys like Gates that have all this money, which generates envy on the part of the hoi polloi? What's going to happen to them Is it going to be like in the Soviet Union where they lose everything? Is that possible? I'm
Boy,
not sure.
yeah, I'm not sure. And that guy, it's hard to have much sympathy for him. But yeah, obviously, if they do that to him, they do it to anybody who's got any assets, which is the problem. So Doug, when we look at this, we're assuming inflation is the only way out for the Fed and for the federal government. So that's their approach. And so what we're seeing here is a decade of that push driving inflation up, and that is, it bubbles into all these asset prices, and it causes like these huge gains in the Nasdaq, and basically almost every asset class out there except for a couple, and the couple are the U.S. dollar, which did not gain much during the time period, gold, and commodities in particular. So, what is that? Why is it that those things have not gone up in value as compared to, large cap stocks or REITs or things like that?
Yeah, that is an excellent question. You'd think that commodities and gold, well, commodities and commodities have always been very volatile, just because of the nature of the production and so forth. I hadn't thought this out exactly. Why have the commodities lagged so much in a time of financial boom? Well, let me go back a step and say that perhaps the oldest saw in the way of investing is buy low and sell high. And you say that to somebody and they say, well, that's pretty obvious. I mean, why mention something that's so obvious and it's almost stupid to mention? But then they look at the track record of an investment and they say, I want to buy something that's got a good track record, which means something that's gone up a lot already. So it's actually contradictory. Which do you want, a good track record or to buy low?
Right.
Okay, well, then you have to look at the fundamentals. Maybe something's cheap because it deserves to be cheap. Okay, that's fine. But let's look at these things and see what's done well over the last 10 years. And the thing is, when I first started playing around with the markets, I had a very, very short time view. My time frame was, sometimes I used to call my broker twice in a day, which is completely insane. But that's what's being cultivated today in with options trading and things like that.
Right. The people using these Robinhood apps, they're trying to increase engagement with those apps. Yep.
Exactly. And you can't be involved in this stuff today unless you have a cell phone that you're always looking at for alerts as to whether something's
down,
going up or down. It's a joke. It's like the wheeler dealer that calls three brokers. He says, "Hello, New York, buy. Hello, Chicago, buy. Hello, Los Angeles, sell. New York and Chicago are buying." And this is a zero-sum game being driven by trillions of new dollars that are being created and have to go somewhere. So the fact is that when you look at the short term, you're missing the forest for the trees, and you really, you can get lucky in the short term, and we see things that go up actually 1,000% in a week. It's happened recently in some cases, but that's anomalous. And you'll just make yourself crazy trying to A, find them, what thing is going to do that, and then B, deciding when you sell. Maybe you would have sold that 1,000% in a week thing after it went up 10%. Hey, 10% in a day, that's great. But then you miss the look, this is crazy. That's not the way you actually make money. So what's done well over the last decade, which has been characterized by gigantic amounts of money printing? Well, the stock market was the place to be. after Bitcoin. NASDAQ, US large caps, US small caps, US REITs, which are real estate investment trusts, whose assets are essentially commercial buildings that pay rent. So they
Doug,
pay dividends from the rent and
if you
appreciate as the asset underlying goes up. Okay.
imagine for these assets, for all of these, if we look back at the prior 10 years from 2001 through 2011, a lot of those top ones, would not be the top ones in that time period, right? Because we came out of the financial crisis.
I wish we had a chart going back further, because there we would have found that from about 2001, when gold got as low as, if my memory serves, about $255. And here's something interesting. In 2001, 30 years after 1971, when gold was first cut off from the dollar, devalued, they say, gold was $35 an ounce. And at $255, 30 years later in 2001, it was about as cheap in real terms. And it depends on who's calculating inflation and what's in the index of inflation and all this type of thing. It was about as cheap as it was when it was actually devalued. So, and actually silver was even cheaper. Silver got down to close to $4 an ounce in 2001. It was $1.29, I think what it was fixed at in 1971. So silver was cheaper in real terms 30 years later than it was then. So anyway, that previous decade was actually the decade of commodities, because both of those exploded. In the case of gold, up to 2,000. In the case of silver, from $4 to close to 50 in 2011, which is when this starts. So it really depends on when we want to start our decade.
Yeah. Well, I think that's the interesting thing, is because I think the basic thesis that Chris Webber was making in his newsletter about this chart was, what was a loser will be a winner. That there essentially will be a reversal of these major trends, just because this is just how it works. A guy who's, Chris Webber's, I think has a wonderful intuitive sense of market tops.
Well, and people have noticed this for not just years, since today's markets have been around, but for thousands of years, because there's a quote from the Bible.
All right, Doug. So you were saying there's a quote from the Bible.
Yeah. This idea of buying low and selling high, and things that are cheap become dear, and vice versa. It's not something people just noticed in the past few years or decades, or since the creation of the current financial system. In the Bible, I don't know where in the New Testament this occurs, but it says the last shall be first and the first shall be last. Okay. That's often just the way things work in life. Everything reverts to the mean, let's say. Reverts to the mean. So.
Got it. Okay. So essentially what he was saying is this.
I think we're off again.
Yeah, I'm gonna turn off your video here, because we can just keep the audio going. So just 1 second. And that should improve things. So assuming you can still hear me okay, let me just go back to this chart. And so one of the things that we've seen is that the Bitcoin especially has gone up so much in the last 20 million % or something, since 2011. And on the opposite side of that is commodities. I mean, which is the only thing that actually is negative for that time period.
Yeah, that tells me that I want to be long commodities. And incidentally, as we speak right now, commodities aren't as cheap as they were even at the beginning of the year or last year. Look at the agricultural commodities. Corn has almost doubled. Wheat has almost doubled. Soybeans trading around $15. They've doubled. And it's interesting that I think it was 2011, which is when they hit their last peak. That was when we had the Arab Spring,
Mm.
where all these Arab countries overthrew their governments and rioted and so forth, Tunisia, Egypt, whatever. Um, so the problem is in places like that, backward places where people are living hand to mouth, basically. The price of your raw food commodities double. That's a major hit because food is your biggest single item after rent. So the natives get restless and they overthrow their governments, hoping that the next one will be better. Well, it never is in that part of the world for other reasons that we could talk about. So high commodity prices, right now, they're relatively low, but they've gone up a lot just in the last 6 months, tells us that we're looking for political upsets in a lot of poor parts of the world, quite frankly.
Yeah,
But I think commodities are going higher.
they are. I think they are too, and that's certainly what Chris Webber thinks. A friend of mine, just on this note, who's South African, was texting with him this morning, and I was like, "How are things there?" And he has a family they have family farms there. So he says uh, there are a lot of scary things in South Africa at the moment, which that's graded on a curve. There are always a lot of scary things in South Africa, but he's saying at the moment people are really hungry and it's difficult to make ends meet. The infrastructure has gone downhill a lot in the last 18 months. And even though there is lockdown, there's a bigger sense of lawlessness in the air, is the way he was describing it.
I think he's quite correct because I have in-laws who are Afrikaners and they want to make the chicken run. The natives are getting restless for lots of reasons. So that's so true. In fact, as much of a fan of Africa as I am, for many reasons, uh, if if people stop investing in Africa because it gets just too scary and too flaky, I mean, this place it could get really serious there if outside capital, form of investment and foreign aid. Well, most of the foreign aid just stops by for a brief period before it finds its final resting home in the bank accounts of the leaders in Switzerland.
Yeah.
But big trouble coming in the third world. But so what does this chart here of taking the last 10 years tell us? It's that conventional assets, which is to say stocks and bonds, which have done the best, have had their run. I mean, if they keep growing at this rate, I mean, they're going to encompass the known universe. On the other hand, you actually need commodities. You don't need stocks. You don't need bonds. They're very cheap now, even though they've gone up a lot in the last 6 months. What this chart doesn't adequately reflect. So you ought to be invested in commodities and gold and silver and things like that at this point.
So what are some basic rules of thumb that investors, especially if they've not been through a down cycle in the market or one of these periods where the last become first and the first become last, one of these transition periods, which I think seems clear we're entering. What are some rules about capturing profits, not getting swept up in mania? What do you think?
Well, this is a real problem because I've said for years that everything is overpriced, and that's actually self-contradictory. It's metaphysically impossible for everything to be overpriced. It's a relative term. So what's underpriced that makes everything else overpriced? Well, the stock market, definitely. Bond market, not just a bubble, hyper bubble. Real estate floats on a sea of debt. Something goes wrong with the debt, like interest rates go up, real estate's in trouble. In addition, of course, it's the most obvious thing for local governments to tax because only rich people own real estate. So all these things have been really great places to be, but for how much longer? Okay. So where do you go at this point? What's cheap? Like I said, it comes down to commodities in general, but it's really hard to own soybeans unless you're a farmer. And being a farmer has its own set of risks and aggravations and so forth. So what do you do? you buy gold and silver, the monetary metals. And that's what I'm doing.
Hmm.
And in particular, as we've said before, you want a stock market tip, it's to buy gold stocks. Because I've said this before, but it's worth repeating again. It's that the average all-in sustaining cost, that's not just the cash cost of mining the next ounce of gold out of the ground, the immediate cost. This is everything, including reseeding the land after you fill the hole up and plant grass on it. The average all-in sustaining cost of the average producing mine in the world today is about $1,000 an ounce. But the price of gold is about, I don't know what it is this morning, say 1900, it's closing in on that. So gold mining is actually a very profitable industry at the moment. And I think it's going to get more profitable as gold goes higher, goes into a bull market. Again, a cyclical bull market. So there's going to be a panic into these gold stocks. A lot of them are yielding halfway decent dividends now, 2, 3, 4% or more. So gold mining stocks is the one place you should be concentrating on. That's kind of a no-brainer, I think. There are other metal stocks as well. I mean, you can find obscure, thinly traded stocks that do things like lithium and tungsten and nickel, whatever. But gold and silver, keep it simple, keep it easy, and they're volatile because people don't get tungsten fever. They don't, but they get gold fever. So keep it simple for yourself. Buy gold, and when the gold has performed as well as maybe not Bitcoin, I don't think nothing's going to ever perform as well as Bitcoin did for the last 10 years. But when it performs really well and gold is on the front cover of all the magazines, time to sell and look at a chart like this and see what's going down a lot. Unless, of course, the Bolsheviks in Washington actually do an instant replay of what happened in Russia 100 years ago and nationalize everything. Well, if that happens, you lose everything.
So how do you know, a very practical question, because you've had some huge gainers, you've owned some stocks that have gone up huge percentages. And, one of the big things that I think that when we were in Mexico and talking to some Bitcoin people is that it had succeeded. It had been so profitable for them to hold that the idea of selling even if it's gone up 20 million%, or if they're up 20 times in the last 6 months in Ethereum or something like that, the idea of selling, they thought could only be a mistake. Like, how do you know, as like when you've had a huge gain or a huge winner, like how do you know when you should sell?
Well, the trend is your friend. So actually, you don't want to pick a top when the trend is still going in your direction. Now, the question is the trend still going up in Bitcoin? I mean, is Bitcoin going to eventually be worth more than everything else in the world? Well, it will be if it keeps going up at the rate it has the last 10 years. So there's going to be a peak for Bitcoin. And the reason why I own Bitcoin, don't own that much, frankly, because I was a latecomer to the game, unlike yourself. I know you were an early adopter on it. It's that I see it mainly as a transfer mechanism for larger amounts of capital, not something you're going to use to buy a coffee at Starbucks or something like that. So it's so what's the top for Bitcoin? Was it 60,000 or is it going to go to 100,000? Well, I don't know, but from here, we're talking about maybe Bitcoin's going to double from its previous peak. Maybe it's possible. But in a world where it's been going up hundreds of percent per year, a double isn't so impressive anymore. And there's obviously more risk than there is reward. What happens if Bitcoin 2.0 comes into favor? What are you going to do with all your Bitcoin 1.0? it's going to go down. You got to remember to sell it. I think you ought to, everybody ought to, that has Bitcoin, think of selling some and buying gold and buying silver, or gold and silver mining stocks, better yet.
Right. And it's just a matter of risk management, really. I mean, I think that when I had a conversation at one of the meals we had in Mexico with somebody who was an Ethereum maximalist. I mean, he just thought that Ethereum was the solution to all the world's problems. He didn't believe in Bitcoin, didn't believe in any of the cryptos, didn't believe in gold and silver. He was an Ethereum maximalist. And I left that conversation and sold $1 million worth of Ethereum. I mean, because I was just like, the psychology was so, it can only go one way, that it felt like at least a near-term top, and that was about $4,000. So, which it's now, fallen substantially since then. It may go up past that, but at that point, I was like, the risk of it again going down to where it was 6 months ago when it was $400 is great, I think. Or I've captured huge gains, or I have huge gains that I could capture, or I could hope it doubles or triples from here. And I think, just like you said, I mean, whether you just have, I mean, Bitcoin it could certainly double back up to over 100,000 this year. That's certainly possible. But it also could go back down to 20,000. And the thing is, we just you never really know how these things are going to perform. And if you have if you're not capturing profits along the way, then you're basically putting yourself in a corner where you might not be able, you might be succumb to your own psychology when the market turns, away from you. Like you might not be able to make an intelligent decision. You might not be able to objectively recognize that the trend has actually reversed because you have too much capital there, and your psychology is sort of waiting for it to come back. You know what I mean? Does that make sense?
It does make sense. And you heard the bell ringing at the top of the market when, after something had gone up hugely in a short period of time, somebody was singing its praises and saying it's going to go up even more hugely. Well, maybe. But that's not the way you make money in the market. You got to transfer the money into something that's cheap. And then hopefully you get lucky again and you repeat. So anyway, as I look at this chart right now, what am I doing? And recognizing that all these things could go a lot higher if the government prints enough money and so forth. Yeah, of course, I see that. But I want to go from high risk and relatively low reward to what I perceive as low risk and high reward. So I've always been a fan of gold for philosophical reasons, not always for financial reasons. Right now, I'm a fan for both philosophical and financial reasons.
Great. So do you, just a couple technical questions, I guess. Are there any rules? Because I know you're not a trader, you're a speculator, but you're not calling your broker twice a day anymore. You haven't done that in a long time. Are there any kind of rules of thumb that you use just to know when to enter or when to exit a market? I mean, do you like using things? I know in your newsletter years ago, you talked about like the Casey free ride principle. It's like once you invest in something and it doubled, taking your original capital off the table so that now there's no risk to you in the upside. I mean, principles like that, are there anything like that you would just encourage people to think about?
Yeah, the two big emotions that affect everybody in the market are greed and fear. Okay, so how do you counter your emotions? Well, mechanically is a good way. And after something, let's suppose something doubles, no matter what it is, if it doubles, maybe you should take your initial capital off the table. And that way, at least in that investment, you don't have any risk. Now, when you redeploy the money, it's going to be at risk again, okay? But as a general rule, after something, and I understand, if you bought Berkshire Hathaway back in 1970, it wouldn't have been smart to take half the money off the table after it doubled, but you didn't know it was going to double again. You can't know these things. So
it wouldn't have been smart, but it also wouldn't have been it wouldn't have been stupid if you kept the other half in there and actually let it ride. You know what I mean? You would have ended up pretty well off still if you'd put $10,000 in. Once it doubled, you took your $10,000 back over the years, you still would have done okay.
That's right. There's a lot to be said for after an investment has given you a nice run. You're not married to it. Don't fall in love with something that can't love you back. Everybody's heard that, but they don't do it. So get your original capital back. And if you can't think of anything better to do, put it into dollars, which is a depreciating asset, yes, but it's better sometimes, especially maybe today, to be sure that you're losing 5% per year than maybe losing 50% in a matter of months. So there's nothing wrong with holding dollars for a while. Yes, they're hot potatoes, no question about it. But still, grab the money, you make a profit, and look at it. If you want to buy back, you can always buy back, okay? Oh, I made a mistake selling. Fine, I'll buy back. Looking at it without the psychological ardor that was guiding me before, more rationally. Do I want to buy back or not? There's a lot to be said for selling and then deciding when it's in cash, do I really want to buy that back or something else?
Right.
You try to be objective as opposed to be emotional. Easier said than done, of course.
Yeah, well, but the emotions are the hardest part. And so if you have these rules in place, it at least allows you to push off, I think, a lot of those psychological problems that cause people to make bad decisions. So that's a good way to handle the greed side by lowering your risk, by taking your initial capital off the table, and thinking about how to redeploy that later. What about managing the fear side of things, though? When Bitcoin, for instance, the other day, when it was undergoing a very serious slide in that, that one day, I don't remember which day that was, but where it was down, 30% or so. And like, there was genuine panic. And in that panic, I mean, I couldn't even log in personally to the exchanges to be able to buy, because I wanted to buy some at 30,000, some Bitcoin actually. But, so at that point, fear is really dominating a market. How do you manage your psychology and trying to avoid that kind of setup?
You just try not to be in the markets at all when they're chaotic like that, because it's not just that you're battling against the psychological craziness of everybody else in the market, but worse, you're battling against your own. And of course, in the back of everybody's mind, you're thinking, God, what if this is the start of something like October 1929 in the stock market? Well, actually, in retrospect, it would have been smart to dump everything on the first day of the collapse, okay, instead of holding on. These are almost unanswerable questions. You just have to look at what passes for the fundamentals. In stocks, what's the general price earnings ratio? What's the general dividend yield? You got to assess the economy. You got to assess the strength of the currency and all kinds of things, and hopefully come up with a rational conclusion. Do I want to be there, or do I really want to be someplace else? I mean, I hate to act during a panic. If I have to act during a panic, it means that I've been thinking poorly before the panic actually unfolded itself.
Exactly. And so the last topic I want to talk about relating to this is, I think that something that causes a lot of the panic is leverage. And what causes that huge swing. I read somewhere that something like 750,000 crypto holders had their accounts liquidated because of leverage.
Mm-hmm.
And I mean, that, first of all, I'm just, I don't like leverage at all personally. I've used it in a couple places, but I mean, overall, it's not something that I feel like I'm smart enough to use. I feel like no matter how rich you are, how smart you think you are, leverage can destroy you so fast if it goes against you. So what are your thoughts on leverage and, how it's being how it's being used today?
Well, look, there are times when it actually makes sense to borrow money. Like right now is one of those times, in my opinion. I just bought a house, took out a very large 30-year loan fixed at 2.5%. And to me, that's a really smart speculation because I know the dollar is going to lose value. Well, actually, we don't know anything, but it's a very safe assumption that the dollar is going to lose value at much more than 2.5% per year for a long time. So it's like a gift. So yeah, I'll use leverage sometimes, and now is one of those times for something like a house. Worst case, since it's all borrowed money and I don't have a love relationship with the bank, I can mail them the keys and walk away. So
Right.
I'm perfectly willing to have a large mortgage against a house right now, but I don't like to borrow money. It reduces your flexibility, quite frankly.
Well, and the way
So,
you just described the leverage on your house, though, you described it in terms of bounds. So you said, well, probably the currency is going to be inflated away. I don't really know for sure, but I think that's going to happen. So the debt will be, less in real terms. And so it'll be a great, obvious choice for you to have made. But then you said, on the other hand, if worst case scenario happens, you don't have that much actual cash exposed at risk in it. And, you could just mail the bank the keys. And I think the problem with leverage and people's use of it is they actually do not think through those bounds of like, well, this is the possible upside and this is the possible downside. And then they take on too much risk that then overexposes them on the downside.
yeah, that's absolutely true. But it was Benjamin Franklin that famously said in his autobiography, or was it poor Richard Almanac? Well, it was one of those. It was Franklin. He said, neither a borrower nor a lender be. And he's actually quite correct from that point of view. Although in today's world, you have to recognize that, and the law recognizes this as well, it's that when you deposit money in the bank, you are a lender to that bank, basically an unsecured creditor to the bank, at least for any amount above the FDIC's phony baloney insurance. So it's very hard to avoid being either a lender or a borrower in today's world. The only way you can avoid that is basically by owning a bunch of gold coins and burying them someplace safe. But
or you could argue, or crypto, or owning crypto is also something.
Crypto, yeah, that's true. That's true, and I do believe that it's important to have crypto as a form of money. I mean, it's got a lot of advantages when you come right down to it, even over gold as a form of money.
Right. And that is a separate argument, though, from the market trends and how much things have appreciated. Like that's a different argument. Like whether or not now is the time to buy Bitcoin is a different question than whether or not Bitcoin has a lot of virtues.
Yeah, exactly. People make the same mistake with Bitcoin as many people, including myself, many years ago, made with gold. It's an investment. Don't mix up your personal philosophical and ideological views with the financial markets. They're two different things.
Right. Good. Okay. Well, are there any other things you want to leave our viewers with in terms of just the things to have in their head, investing heuristics, or just things to watch out for?
Yeah, be really careful when you buy stocks or bonds today. I think it's a bad idea, just my opinion, for what it's worth, to get into the general stock market. Good idea is to buy more gold, physical gold and silver in your possession. And if you want to speculate, buy gold stocks. They're the best speculation I can think of right now. There are others, but they're too obscure and small and hard to get in and get out of. Gold stocks, simple.
Great. And if people sign up in the description, I'll have a link to an email list. If you sign up for the email list, you'll get a report where, Doug's got several gold stock recommendations in there, things that you own. So people can get that for free. And I think we'll leave it at that, Doug. So thank you very much for your time today. I appreciate it. And we'll talk to you next week.
Have a good weekend as well, Matt.
Thank you.